Hello and welcome to Let's Talk Finance, the show where we talk about everything finance related. Today we're going to compare two of the biggest chipmakers in the world, AMD and Qualcomm. These two companies have both reported strong earnings and outlooks for the AI market. But how do they stack up against each other in terms of products, performance, and strategies? Let's find out. Let me highlight their core product categories and target markets so that we gain a broader understanding of how AMD and Qualcomm differentiate themselves in the semiconductor industry. AMD and Qualcomm are two leading semiconductor companies, each specializing in different product categories and serving distinct target markets. Let's explore their areas of expertise and the products they offer. AMD is renowned for its CPUs and GPUs, which power a range of devices including servers, PCs, and gaming consoles. AMD's Ryzen and Radeon brands have been gaining market share due to their competitive performance and affordable prices. Additionally, with the acquisition of Xilinx in 2022, AMD gained access to programmable chips that can be tailored for specific AI tasks. And in 2023, they acquired Nod AI to expand their AI capabilities. AMD's products focus on gaming, content creation, and AI workloads. On the other hand, Qualcomm specializes in ARM-based SoCs. Their Snapdragon brand dominates the smartphone market, particularly in the Android segment. However, Qualcomm also offers chips for tablets, laptops, wearables, IoT devices, and automotive systems. Their products focus on battery life, 5G connectivity, and AI accelerators which facilitate on-device AI processing. On-device AI is the process of running AI models locally on the device, without relying on cloud-based solutions. This enhances privacy, security, reliability, and efficiency of AI applications. Qualcomm's AI engine is a dedicated hardware component that can run complex AI use cases at high performance and low power on the device. Qualcomm's AI engine is integrated into its Snapdragon platforms, which power a wide range of devices such as smartphones, tablets, PCs, automotive, IoT, and XR. Both companies are also investing in AI software and platforms to make their chips more accessible and useful for developers and users. AMD recently acquired Nod AI, a startup that makes AI models more compatible and optimized for AMD's chips. Qualcomm recently launched Snapdragon AI, a platform that enables AI applications and services on Snapdragon devices. Let's analyze both AMD's and Qualcomm's latest financial results. For AMD, everything was up, basically. Revenues were slightly up at 4%. They also increased their margins and generated a net income of about $300 million. You will see two figures on the balance sheets, one is GAAP and the other non-GAAP. There are situations where you need to look at the non-GAAP figures. However, most of the time I look at GAAP. If you don't know, non-GAAP net income is a measure of profitability that excludes certain items that are not considered part of the core operations of the company, such as stock-based compensation, acquisition-related charges, and restructuring costs. However, I tend to take this into account. I've seen too many failed acquisitions and restructurings as well as ballooning stock-based compensation that is not in line with the company's profitability. At the end of the day, you as a shareholder are paying for these, so might as well take them into account. For Qualcomm, everything is down year over year. Way down, actually. They've seen revenues go down by about 25% and their profits sliced in half. But to my eyes, this doesn't show the whole picture. Let's dig deeper into their revenue segments. Maybe we can find a reason for these results and maybe even some trends for the broader chip market. First off, AMD. Their data center revenues were flat, which is concerning as this was supposed to be the main growth driver for AMD in its battle with Intel over the data center market. However, in that regard, I know from Intel's release that their data center revenue was down 10% in their latest quarter, so flat revenues is fine. Surprisingly, the client revenues were up 42%. This includes desktop and laptop CPUs and GPU sales, so either the consumer started buying more of these devices or AMD is taking market share from Intel in this segment. And again, Intel's client computing revenues were down 3% in the latest quarter, and this supports the hypothesis that AMD is taking market share from Intel. But at what price? They went from losing money on this segment to making some money. But as you can see, it is their least lucrative part of the business. However, when comparing AMD to Intel, you need to take into account the scale. Intel takes in about $8 billion in revenues from the data center segment, while AMD takes in $1.6 billion. Same with the client computing segment, where Intel takes in about $4.3 billion, while AMD takes in $1.5 billion. What I am trying to say is that it's easier for AMD to capture market share than for Intel, but this could get harder in the future as Intel inevitably will respond. Their gaming segment didn't do that well either. And lastly, the embedded segment where they compete directly with Qualcomm. As you can see, this is the most lucrative part of the business, so it is an important segment. And here as well you could say that AMD remained flat. As for Qualcomm, they split their financials into two main segments, QCT and QTL. QCT is comprised of handsets, automotive, and IoT. Automotive saw healthy growth by 15%, however both handsets and IoT saw declines. They still brought in about $7.3 billion in revenues from this segment. Their other segment QTL includes wireless patents and technology licenses, which brings in about $1.3 billion in revenues. Next, let's take a look at profitability metrics. Again, only GAAP figures. Qualcomm reported a net income of $1.5 billion and an EPS of $1.32, while AMD reported a net income of $300 million and an EPS of 18 cents. This means that Qualcomm was more profitable than AMD in GAAP terms, as it generated more net income and earnings per share from its revenue. The story stays the same when we look at the operating margin, which was 23% for Qualcomm and only 4% for AMD. So, while AMD is accelerating their growth in revenues, their profitability is way lower than Qualcomm's. Let's look at how they manage their finances. In terms of debt, there is no comparison. AMD has a total debt of about $2.4 billion, flat year over year, while Qualcomm has a short-term debt of about $1 billion and $15 billion in long-term debt. In terms of stock-based compensation, they both pay a good portion of their revenues to their employees. It's not yet out of control, so I see no reason for concern in this regard. The same goes for share buybacks. Both companies buy back their shares, which is a benefit for investors. You could argue that AMD is buying back their shares at a higher valuation, which could be a negative. However, I don't view this as something significant for the comparison of these stocks. Qualcomm pays out a nice 2.8% dividend out to investors, and this dividend is well covered. They have a healthy balance between paying a dividend to investors and reinvesting in growth. As a matter of fact, the dividend has room to grow and has been growing over time. Lastly, let's look at the current valuation of these companies. AMD seems to be overvalued by most traditional metrics. With a huge PE ratio and market cap, investors expect massive growth ahead for AMD and market share gains, which is always risky. Qualcomm, on the other hand, seems to be fairly valued, and overall a more conservative play. This also means that investors aren't expecting Qualcomm to grow in the future, which can leave room for surprises. If I perform the DCF analysis, it won't look good for AMD. And this is sort of the problem with the DCF method. This doesn't mean AMD will go down by 95%. That would be crazy. This just shows the level of over or undervaluation in the market. When a stock has a 0% value here, it doesn't mean it won't grow. It means it will likely just keep up with the market. When the value is negative, I tend to ignore that value and probably the stock as well. Not to say that AMD will not grow, and this number can change over time. It just tells me that the company is currently overvalued and I won't be buying it just yet. In the future, who knows? So I ignore the specific value in this column as it doesn't make sense in this situation. The bottom line is this: when a company has a large market cap but barely makes some money, it will show up here as way overvalued. Of course, in the future they can start making way more money and grow into this valuation, then this number will also reflect that. For now, it's just too risky for me. Also, DCF should not be used as your only valuation metric. Qualcomm, on the other hand, shows a great level of undervaluation. According to my DCF analysis, this stock could double, or even more in the next 5 years. Finally, let me add some of my own predictions and thoughts about the semiconductor market. These are my own thoughts about where this market is going, a personal touch, if you will. Everyone's situation is different, and this is where your own predictions come in. This is not financial advice. The smartphone market will expand in the future, especially in emerging markets where Android phones are more affordable and accessible. It is estimated that the smartphone market will become larger in the next 5 years, while the PC market will also grow. In terms of absolute value, the mobile market is way larger and will bring in more revenue. I believe Qualcomm, as the dominant player in the smartphone chipset market, will be the beneficiary of this growth. So taking the probable growth into account, as well as the dividend you get while you wait for the growth to materialize, add to this the undervaluation of the stock, and I believe Qualcomm is a strong buy. I wouldn't mind owning AMD. However, with the current valuation, it is definitely the riskier bet. That being said, AMD is the more loved stock by many fans who believe in its vision, innovation, and growth potential. AMD also has a loyal customer base, especially among gamers and PC enthusiasts, who prefer its products over its rivals. So I would not be surprised to see AMD going even higher, but that is not a risk I am willing to take now. That is just my opinion. You should do your own research and decide which one suits your portfolio better. Thank you for watching this episode of Let's Talk Finance. If you enjoyed this video, be sure to like and subscribe for more content on stock analysis and other financial topics. And as always, feel free to leave your comments and questions below. I'll see you in the next video.